Alrighty, we are going to be back testing November the 7th, 2022. So first, let's start off by checking out the news here. Let's see what we got going on. We got a couple of FOMC members speaking at 3:40, but honestly, that's not going to affect my day whatsoever. So let's go over here to our charts. So first, after we check the news, we're immediately going to want to identify our daily liquidity. So let's see, it's Monday, so we want to look for Fridays. Okay. But so far right now it looks like we are going to be taking out the Friday high, so that is what we are going to be looking for the morning on ES. Let's take a look here at NASDAQ. Yep, relatively the same thing. Okay, so since we haven't taken out any of that daily liquidity yet, we're going to be looking for EM1, either variance 1 or 2. So in this case, it looks like we could potentially have a variant 1. And essentially how the variant 1 would work is that you see that we have this old session high that got swept. This can also be used as a discount array. So essentially what I'm looking for here, which it depends, it might not happen, but maybe market will come down here, have like some sort of, sideways action, come back up, have a market structure shift, and then we can take the entry on a 5-minute order block towards the previous day high. Now, the other scenario that can occur as well is that market just returns all the way down here, sweeps that low, and then we have a market structure shift and off a 5-minute order block and then trade towards the previous day high. Now, in the unlikely event that we don't take the previous day high, another scenario that could happen here as well is we sweep this session low here, market returns to that session low as an area of a premium, we have a break of structure, and then we would actually be taking a sell towards the previous day low. But that is honestly very unlikely in this scenario, but I'm just explaining it for just for your notes. So now let's go down to the 10-minute time frame and let's see what happens. Okay, so here we can note that we have tapped into that session discount array. So now we want to see what is the last 10-minute swing high that we need to break in order to be looking for a variant 1, and that is going to be this point here. So now we want to go on to the 5-minute time frame, and then we see if we have some sort of a break of structure. Okay, so we did end up having that break of structure. However, we ended up just sweeping the daily liquidity anyways, which is honestly no problem whatsoever. So now once the daily liquidity has been swept, we want to either look for EM2 model or an EM3 model. So to identify those, we want to see where our discount array is last, and that's going to be this area here. We can delete this old one here that we just use, honestly, just because I don't use old areas like that. But anyways, so this is going to be our discount array, and then we also want to draw up our session lows. So this is going to be the most recent session low, and then I want to clone that and then draw out this one. So what we're looking for here is the market either to continue up, come back down to a session discount array, we come back up, we have a 10-minute break of structure, and then we can take an entry off a 5-minute order block for a continuation to go long. However, there's also another scenario here where instead the market just comes up, maybe consolidates, breaks structure, and then we have a 10-minute bearish MSS, which in that case we can take a 5-minute order block entry towards the direction of the previous session lows. One thing to note here as well, I've mentioned this before, but with the EM3 and the EM2 models, ideally once we break daily liquidity, we want to be looking for a reversal, which would be the EM2. However, sometimes what can occur is that the EM3 will happen, which in that case we could take the EM3, and then if that works or if that fails, whatever, we can just move on straight to the EM2 because the EM2 is the reversal, whereas the EM3 is like a continuation of the trend. So we can't take a EM2 and then look for an EM3. It doesn't work that way, but we can take a EM3 and then take the reversal downwards, in this case with the EM2. So let's go to our 10-minute time frame here and see what happens. Okay, so this is our new low. We need to have a break for a EM2. Now bear in mind, it is possible that market can return, right? It'll kind of break that, but it won't break it. That will trigger our like valid MSS that we have with the Fibonacci strength tool. Instead, it'll be like in the form of a liquidity sweep off of this discount array to go upwards if we're still looking for that EM3 model. So that's what I'm looking for as of right now. Let's see what happens. Oh, actually, you know what? The session ended. So that is the end of the day for ES. Nothing there. Now let's take a look on what happens on NASDAQ. Likely going to be similar scenario. The biases are aligned right now. So first, we want to mark up this discount array here. And we also want to mark out the session lows, just in case a V2 comes up. You never know. Go on a 10-minute. See what happens. So the 10-minute tapped into that discount array there. However, to have a 10-minute MSS, it's like all the way up here. So that is definitely not going to happen. So let's see what happens here. Interesting. You see how it's like consolidating within this discount array here? That's kind of like a supercharge in a sense towards that previous day high. It's something I've noticed in the past, so definitely kind of cool that it works that way. So yeah, so even if you were looking for that 10-minute, you wouldn't have had an entry for the EM1. It was simply just too strong. So that's all right. Now let's go back to the 12-minute time frame. Once that daily breaks, we want to identify our new discount rate just in case the EM3 happens, and then go back to the 10-minute time frame, and then let's see where our next swing low is. So we found our swing low. This is the area that we need to break in order to have a EM2. However, bear in mind that the market is about to close, but let's see what happens. Okay, so overall, not that bad. So now we want to do Tuesday, November the 8th. We have congressional elections. Okay. That's interesting. That is an interesting one, honestly. I don't think I've actually traded through congressional elections, honestly. So let's take a look at that and see how that works out for these models. So okay, so same story. We want to be looking for where our daily liquidity is. Have we swept daily liquidity? Yes or no? So this is Monday. It looks like we just swept daily liquidity in the London session, which is no problem. That means we want to be looking for EM2 and AM3. That is right. Okay. Previous day low. We want to mark out our session lows as well, just in case. It's always good to do these things. And then we also want to mark up a discount array. However, this is sort of looking like it's setting up for a reversal. Okay, so I wouldn't be looking for any EM3s per se. It's pretty unlikely, but there's nothing exactly saying it wouldn't work. So let's mark up our discount array. And then let's go on NASDAQ here and just take a look at the same thing pretty much. This is the previous day high. Session low. The way it's setting up on NASDAQ anyways, it's a little bit different than ES. It kind of looks like this is a reversal pattern that we have here, so we can't even really look for EM3, because the whole point of EM3 is that we're supposed to be coming back down to a discount array after sweeping daily liquidity, but the discount array can't be this much in a premium of the daily liquidity, because that doesn't really make that much sense, right? That's not a discount. So probably gonna be looking for just EM2, at least on NASDAQ. So let's take a look at ES, see what happens here. Okay, oh yeah, we want to be on the 10-minute time frame too. The low that we want to sweep to take a EM2 is going to be this one. If an EM3 does occur here on ES, we want to break this high, like really strong. Let's see what happens. But we do got this big bearish FVG, which is pretty much like a low-key like an MSS. So oh, okay, it looks like we actually did react off of this area here. So let's go on the 5-minute. Oh, it actually was a strong break. Honestly, the problem that I have with this is that, oh damn it, I did not mean to do that. Yeah, the problem that I have with that ES trade is just that, like, it doesn't really align too well with what I'm looking for here on NASDAQ. So, but regardless of that fact, it is a valid EM3 that I'm watching right now. So if we take a look at the candle that broke structure, remember we identified 10-minute swing highs and lows to determine if we have a market structure shift, and then we actually see that break occur on the 5-minute time frame. The candle that broke that structure, how was the fib strength? We can see that the candle body closed above these both red lines. So that means that this is a valid market structure shift. So if we take a look at our range right here, which is clearly a continuation range, we want to look for an extreme order block, the most extreme order block possible. Propulsion blocks are just a little bit more risky, and honestly, like, you know, if you question your trades and your entries, you have to ask yourself, hey, like, if I had a $4 million account, would I actually take this entry? So our stop loss is below 30 ticks, so we can take this for a 4R, but for back testing purposes, we are just going to be doing the 3R. So let's take a look at how this would have turned out here. So see, this is exactly why I was saying, you know, if the bias is not aligned, you know, it's just really not a trade that we are looking to take. So this is really just for demonstration purposes. The reason why the bias was not aligned was because on NASDAQ, we're looking for a sell. We can't be looking for an EM3 because our discount session array isn't a premium. So it's kind of like, that doesn't make any sense whatsoever, right? So What we are going to be looking for is an EM2 model. Okay, so the EM2 10-minute market structure shift would have occurred here, and then we can see we have a very, very nice candle body break there as well. And then if we use the 5-minute time frame, we can see that we do have our order block right there. So this is the entry we are looking to take for a short. The stop loss is at 33 ticks, so we want to take it for 3R, and we can see that 3R is really nicely aligned with that session low. And then if we want to get a little more technical with it, we have some equal highs there, so this can really count as like a liquidity sweep, which is nice. Okay, so let's see if this actually played out. Okay, so we actually got tagged into the entry right there. And no, okay, all right, we just got played then, so that's no problem. You know, it does happen sometimes, and of course, you know, we see that on the news it is elections. So I guess a note that we could take for this day is that you know, we just don't trade election days. Me personally, like, I haven't exactly trade elections before. I'm just back testing it in this video just for notes, really. So note for the day is just do not trade elections. Not a problem. So we're just gonna put EM2. So this will be a nice note for us. We are not going to be trading elections, which makes sense. Yeah, because at the moment right now, the only news days that I don't trade is CPI. CPI is just completely impossible to use my models with. So we don't trade CPI days. NFP days, we do not trade. NFE, I trade only after NFE actually occurs. But besides that, yeah, so we're just going to disregard all of these entries then. So yeah, we'll just skip this election day, just because that was clearly just too much manipulation there, really. So let's take a look at Thursday CPI. Okay, we're not, no, like, seriously, I'm just gonna show you exactly why we don't trade CPI. It's just a bunch of bull. So let's take a look. I'm not even gonna show you NASDAQ because this is gonna be good enough. So let's say we were trading on Thursday, right? So we would mark out our daily liquidity, right? There's our high, and then there is our low. I'm not even gonna draw up the session liquidity because there's no point. What time is CPI? It's saying CPI is at 8:30. Okay, so let's mark up 8:30. 8:24 is good enough. Oh, you know what? Completely didn't realize that it was Wednesday there. Okay, so that is my bad. That's my bad. I'm still really tired. So, we are actually looking at Wednesday, November the 9th. We can see that we have final wholesale at 10, crude oil at 10:30. So that means we would want to mark up our news for at least 15 minutes in advance. I know I replayed the chart a little bit further there, so I'm just going to show you on a technical reason why we would still be looking for a short towards the previous day low. So we created this massive range here. We left behind the daily high and then the daily low. So the market did make new low here, so we are closer to the previous day low. The only way I would be looking for a buy is if the market actually did something like this. So the market created this low. We came up, swept this session high. We came back to that discount area, and then we traded towards the previous day high. However, something I'd be looking for right now personally is to see how it reacts off of this premium array. And if it reacts well off of that premium array, then we can catch it for a short after a 10-minute break of structure. Or we could sweep this session high here, and then we reject off of it towards the previous day low. That's something we can look for as well. Okay, nice. Now let's go to the 10-minute time frame. Okay, so market came all the way down here, swept it. We came up. We would need to break this low here in order for us to be looking for a variant 2 of a EM1. Actually, that's technically a break of structure we'd be looking for. This is the low. This is the high break of structure. Okay, actually, now, okay, this would have been the high we need for a bullish MSS, which we took. Created a new high, created a low. We broke that high, so this would be the new low for a 10-minute MSS. Now bear in mind this orange line here, and then what? So we're not taking any entries in between these two orange lines. If there's an entry that occurs, it's just invalid, 100% invalid. So we did have our MSS there. We just want to ensure that it aligns on the 5-minute. So we can see that it does align. However, like what is this order block that we have here? It's huge. That is not something I'm looking to take. No, it's yeah, okay, yeah. So right now, with ES, I do not look to take any trades with a stop loss above 50. Sometimes I'll take it above 50 if the conditions seem nice. But honestly, this just does not look like good PA. So it's not something that I will be taking personally. But especially with this news coming in here, like let's just say we did take that entry, right? We would have got tagged right there. We'd be looking for 3R. Or actually, well, if we follow similar rules to NASDAQ, we would be looking for 2R, but like that's bullshit. I'm not calling that a win, honestly, simply because of this scenario here. But anyways, let's say if we did take that trade, right? Like what new we have news coming up here in between this area. And then if we use the 10-minute here, we can see here that we would have placed our BE right after we broke this low here, because that follows the reversal pattern that I have. Is if once we establish a new low, this would have been a 10-minute break of structure, and then this high right here would have been the high needed for a bullish MSS, which is going against our sell model. So this would have been a break even if we took the trade. But let's take a look at what happens. So at least you can see here that the logic is right, but it's just the conditions and the way that everything was looking. It just was not sitting right with me whatsoever. So I don't regret taking that entry at all. We can even see here we have another reaction off of a session low, which is So, damn, that's a lot. That's a lot of movement, but that's not something we would have been taking anyways. So now at this point, we either be looking for an EM3 or an EM2. So let's see what happens. Okay, that is the end of the day for Wednesday on ES. Now let's take a quick look here at NASDAQ. So I want to draw up, or oh, this is still Tuesday. Oops. Yeah, I guess this is what happens during the elections. That's crazy. Okay. Similar story. Okay, this is drawing up our previous day low. Now we draw up the previous day high. Draw up the session highs just in case. Now we want to draw up this premium array. Maybe, who knows, the saw will be a lot cleaner on here. Okay, we also want to mark up what time the news are. We'll give ourselves a gap of at least 15 minutes. Wait, did the news start? Okay, it starts at 10, so we want to mark up around 9:45 and then have the gap here. Let's say 10:36. Okay, so now we want to go on a 10-minute time frame. Okay, so what we're looking for here is a break of structure from this low. We can see here that we did have a MSS right there. So if we create a little range, break that range, the new low that we have here is going to be the area we need for a 10-minute MSS. So let's take a look at what happens. Okay. So we're going to be identifying these breaks on the 5-minute time frame. Please remember that. We want to see what broke structure. So this is the candle that broke structure. Is the candle following the fib strength tool? The answer is no. So what we want to do is look for a continuation candle. So essentially what could happen here is that if the candle that broke structure doesn't follow the fib strength tool, we either want to look for the next 3 candles to see if it breaks, if the candle body breaks below the red lines, or the alternate scenario is as well as that we just have a complete reversal as well. So we can see here that the second candle after the candle that broke structure did have the candle body close slightly below the red lines. So this would be a valid entry for a EM3. So now we want to mark up this order block here. Let's see the size of that order block to see if it fits our criteria. Okay. Let's see if there's anything cleaner. Okay, thank God. Okay, so sometimes what we do here is that we can check in between the 5 and the 10-minute to see if there's any cleaner order blocks. Now on NASDAQ, we don't want to be taking a single, like even at a lower risk to reward, we don't want to be taking any trades with the stop loss above of 213 ticks. So if we are above 200, sorry, so if we knock it down to this 8-minute order block, you can see it's exactly 200. So what we can do here is that we can take profit for 2R. That would be 2R there, and it aligns with the direction of the previous day low. The bias was bearish on ES, so the biases are aligned. Yes, okay, so that means we can take this entry here. Now, bear in mind, something that I just want to explain again, just so you guys don't get confused. We have our news times here. The only rule that I really have is that unless it's CPI, which we don't even trade, um, or like ISM or something like really big, as long as it enters before news, before that 15 minutes before news, the entry is completely valid. So with this case here, we can see that we did indeed have a win with the EM1 V2, which is nice. It's kind of unfortunate that it's only 2R, but there's a reason why I created that on Nasdaq, because just for example, right? Like, the point of my models is to just get in and out as fast as possible. And if our stop loss is 200 ticks, that means we're looking for 600 ticks for 3R, which is just very unlikely to occur unless the market is just super volatile. But we're not taking those types of risks around here. So EM1, V1, or sorry, not V1, sorry, V2. We close 2R. Risk, we always risk 0.5. Stop loss size was exactly 200, so it fits the criteria. And then there we go. So we got 2R for the week so far. Little bit slow, but is what it is. So now, okay, so now if we take a look at Thursday, we see CPIs on Thursday. We don't trade CPI, and for very good reason. So like, I'm serious. If I see CPI the next day, I just do not look at what the that's insane. There's a reason why I don't trade CPI. It's impossible. Because the problem with my models is that I'm looking for daily liquidity and session liquidity, and not just that. I require to have clean sweeps in order for me to look for entries. So yes, right. We have our previous day low here. We're relatively close to the previous day low, so that's the area I'm going to be looking for. So let's just pretend like I didn't even know it was CPI, right? If I didn't know it was CPI, I'd just be looking for a sell, and then we'd be looking for either a EM2 buy after we sweep the previous day low, or a continuation downwards with the EM3, right? CPI is at 830. Let's see what happens. So what would have happened is we would have swept all the session liquidity. I'm honestly shocked if they didn't sweep that previous day low. And then, okay, let's just say, okay, like we saw the market was moving bullish. We could have looked for a EM1 V2 towards the previous day high, but where's the previous day high? It's right here. We swept the previous day high in one candle. And that's not even the time CPI started. Like, that's insane. Impossible to trade. Absolutely impossible. Then if we look at Nasdaq, here's our previous day low. Here's our previous day high, right? We swept the previous day low, and we swept the previous day high, all in one candle. That's insane. No, it's impossible. So yeah, we don't trade CPIs here. I don't care. I know some people are like, oh, there's lots of volatility, but I just do not care. And then we can see that Friday is a bank holiday, so we just don't even trade that. So honestly, very, very, very slow week. But I guess, CPI and elections, that's insane. So that means we're just gonna be holding off with 2R there. I am gonna wrap up the video here. I'm going to be reviewing November the 14th and the 18th in the next video. Hopefully it's a lot better. But yeah, catch y'all later.